Oil and gas in the pipeline in as few as 5 days? Start building your solution now with Power Service, a Distribution Now company. Learn more at www.powerserviceinc.com/EP.
Welcome to this edition of Onshore Connect. I'm your host, Heather Houghton. In this episode, an outlook on M&A activity in this year's showstopper, the Permian Basin. Before we get started, I want to take a moment to thank our sponsors. Throughout 2016, the Permian Basin has dominated A&D activity. In the third quarter specifically, half of the deal count and 2/3 of net acres and value was allocated to the prolific Midland and Delaware basins, according to Raymond James. For the year, Permian deals have made up 43% of all U.S. transaction values, roughly $15 billion. Many have begun to wonder where the ceiling is for Permian acreage. Some reports suggest prices in the basin could begin to exceed $100,000 an acre due to the play's stacked potential. Hart Energy spoke with analyst Keith Buchanan with KeyBank Capital Markets and David Howard with RS Energy Group about deal making in 2017, the remaining prices in the Permian, and possibility of E&Ps paying even higher than $40,000 per acre. Let's listen in.
I think we're still going to see quite a bit of activity in the Permian, and it seems to be accelerating over what it was a few years ago. Back in 2014, the Permian was 17% of A&D value. Year to date, it's 38%. In the third quarter, it was over 50%. So much like, rigs are concentrating in core areas of places like the Permian, A&D activity is concentrating there as well too. There's several large packages and companies and transactions that are potentially out there in the Permian that are going to continue into 2017.
There's a few private equity-backed companies that will need to have a liquidity event relatively soon, in the next couple of years. In addition to that, if you kind of look broadly speaking, in the Midland Basin, the Endeavor is the big prize, so to speak. That's a private company, and there's been a lot of speculation of an acquisition there, potentially by Exxon. But that's yet to be seen. We have yet to see a big sort of strategic come in and do a blockbuster deal in the Permian Basin, and those are impossible to predict, but we would speculate that if that was to happen, the Midland Basin would probably be a more likely candidate.
I think if prices don't go up materially from where they are, we probably have reached sort of that acreage value ceiling, unless more benches and more drilling locations can be, identified in the acreage. That's one thing that could drive valuation multiples higher are, more benches and more drilling locations, and then we can see companies pay more for the land.
We've seen the speculation for over $100,000 per acre. Depending on the price, you can get $100,000+ per acre economic value if you drill the land fast enough and your well results are reflective of the core. But where the ceiling is really depends, in our opinion, on where the equity markets are. As long as the pure play junior companies trade higher and higher, then you can see higher and higher land prices. Yes, but we would actually think that a bubble in transactions on the Central Basin platform would be a good leading indicator of peak Permian. And the reason for that is that the resource just isn't there to the same degree. Historically it was. It is, those platforms and the shelves were responsible for nearly 2/3 of the reserves recovered to date. They're terrific conventional oil reservoirs. But the large regional unconventional oil at the source plays or hydrocarbon at the source plays just aren't present, at least not yet discovered, and we know of no zone that's really looming out there that could be one of those source rocks or shale plays, so to speak, that everybody's so fond of. So at the margin, we like the Central Basin platform. It's got economic opportunities, just lower scale, less opportunity to grow either companies or basin-wide at a material amount. We don't expect that the transactions to to be there. And if they are, it means the market's probably overheating.
Onshore Connect returns next month with a look at break-even costs in Texas's shale plays. We want to thank you, the viewer, and our sponsors for making this program possible. Until next time, let's stay connected.
To stay up to date on the most recent Hart Energy videos, subscribe to our YouTube channel by clicking here.